Hello everyone, it's Tuesday, March 8th. This is your host, The Cowboy, and welcome to Elliott Wave Cafe, the daily chart review, where every single day between Monday and Thursday we take a look at the different asset class, stock, commodity, crypto, whatever we can get our hands on. They look fairly decent in terms of structures and something that's, in the news lately as well, and just try to figure out what's happening in these patterns. So let's begin. Today we're going to take a look at silver here. I mean, you've been pretty sure, unless you've been sleeping under a rock here, that gold and silver are moving strongly upwards here, especially with the latest geopolitical developments in the Eastern Europe. So what you're looking in here, you're looking at the monthly chart of silver, and this goes back to 1956. So I want you to take a shot at this chart and see if you can label it and see kind of what you're thinking about it and what you can kind of come up with. And this is, I use a broker that's called FXCM, where you can find this chart, right? They do currencies and all kind of other things, but that's kind of my data feed for this chart here under XAGUSD. So FXCM is the broker. So I'm going to start to populate this with the counts in here so you can kind of see, but go ahead and take a shot at it and let me know what you think. I mean, clearly you can see an impulse in here, you can see a correction, you can see impulse corrections, stuff like that. And we're in a big channel, right? We're continuing to kind of slowly over many years, continuing to trend upwards here. The high in silver was back in 2011 at about almost $50. I remember because I was involved in this market. I did not take profits, stupid me, back then, but it is what it is. Hopefully we can kind of get back and take those highs and enjoy a much larger rally coming. But it's definitely interesting. The commodities lately have been moving strongly upwards, not just wheat, but you can see oil and obviously gold and, tin and, even copper has had a pretty good rise. So all this kind of base metals and now the precious metals as well. So interesting to see what's happening. Nickel, right, was in the news just a day or two ago as well with some big spikes there. So let's watch this metal, see what's going on. I mean, silver is definitely something it has a large industrial use as well. And, with these disruptions that appear to form in this, kind of global commodity shortage, silver could be one of them that could really push higher in here. So let's take a look. So I'm going to start to populate the chart and take a look. So here we go. I'm pressing kind of control page down. So I'm looking at this. First, I'm noticing a first wave one, let's say, called it super cycle, from this lows to this highs. It's a pretty clean move. Fourth wave, fifth wave in here, which is, notorious in terms of our commodities, because the fifth wave in commodities are very strong. So you can see that in here as well. Wave one, then a pullback here, pretty strong. Wave two pullback. Let's just kind of take a look and see how much retracement we've just gotten in that. So here we go. Back into the 618 for a second wave pullback. Very nice. I'm going to delete that now. So what's next? We're seeing another impulse. Let's see. Here we go. Then you have, so this is the super cycle. That's the cycle. And you can use whatever, label you want, but I'm kind of going top down. So super cycle in here, and then you have another impulse in here in a wave one, followed by another ABC in a wave two. Guess where? Into the 618 pullback for a second wave. So very close to that, in the vicinity of this sort of fourth wave in here. So let's see what's the next. I'm going to go again, control page down, and here it is. So wave one of the slows right there, right? Possible, the leading diagonal in there, back in two, right? Just a flat, down in A, up in B, and then, down in a C wave in here. Second wave pullback, large third wave. You can kind of look inside here and you can see that it's kind of clean impulse, right? Triangle of this degree. So that means that that's a fourth, that's a fifth of a third. It's another fourth and another fifth of this third, right? So you can kind of have to go in here and start to kind of divide this and see how you can find out what those levels are. So you can go 1, 2, 1, 2, 3, 4, 5, 4, and 5, right? And this way kind of gives you a long structure. But the reason why I'm doing that is because I'm looking at the largest declines, as part of corrections. And if you want to do a flat in here, so be it, right? If you say, well, 1, 2, 3, triangle, 4 up in 5, move down here in a wave A, up in 3 waves in B, down in C, and create that as a flat. I have nothing against it. That's totally fine as well. Wave 4 never came into the territory of the wave 1. We're not breaking any rules. Wave 3, it's not the shortest wave. It's the middle wave, but it's not the shortest, which is fine. Wave 1 is short. Wave 3 is longer. Wave 5 is the longest. Similar story like you've had in here. So in commodities, all the time, most of the time, I should say, right? Most of the time, these fifth waves are much longer than third waves, because that's where the fear is. In commodities, it's a little bit, it's not necessarily excitement as it is fear, right? For whatever happens globally at the moment, if it's a shortage, if it's, something where people just kind of flock to this kind of risk off in the safety assets, that's why you're getting longer fifth waves in there. So here is 1/5 of 1. This is again fifth of lower degree cycle wave 1. 1, 2, 3, 4, 5. Then another decline here in a pretty clean and simple, I would say, 1, 2, 3, 4, and a fifth wave in here. Let's see how I counted that. Let me double check. I'm going to go next and find that out. So I don't think I have it in there, but it is a pretty, kind of clean decline. You can even go, 5 waves down in A, sideways in B, and then a flush lower in a C wave. So I don't have a problem with that. You can go 1, 2, 3, 4, 5 here for a wave 1, up in 2, and then you go 3, triangle in 4, down in 5 in here, and then you move sideways in a B wave, and then down in 2. So I don't have to really, kind of squeeze and find out exactly what's going on in here. The chart kind of shows me that there's a 3-wave decline into the 618, and it's more than likely a second wave at the lower degree in here. So now what's going on here? I'm looking at the 1, 2, 1, 2, and now we're rallying higher in silver, right? So let's dive down on the 2-week chart. 1, 2. This is a pretty nice impulse. Go back to a 1-week chart, and let's see if I have any other data in here. Let's do that. Oh, I was pressing the wrong key in there. So decline here in the second wave, major, right? Since 2011 all the way to 2020. So almost a 10-year correction. Talk about a big correction. Hopefully this doesn't happen in Bitcoin, right? You're not getting a 10-year correction in Bitcoin or in cryptos. But we did get it. So it is what it is. You kind of flushed down into the pandemic lows, and then you kind of climbed higher. Again, you can notice here, I think this is a fifth wave that's a pretty strong impulse, out of there. So you can look at the 1, 2, 3, 4, and 5, but I got to make sure that because this wave 3 seems the smallest wave in the sequence, so maybe there is a second wave somewhere down here in a smaller time frame, and this becomes, let's say, a third, and then you're doing the fifth wave advance. So I kind of have to, digest and kind of look at that a little bit more. Let's see, maybe we can find it in here, right? So you can go 1, 2, 3, 4, 5 for 1, 1, 2, and then probably that's a third, fourth, and a fifth wave. So there's probably several ways to look at this thing in here, but clear, nice impulse here in this wave 1, and now you're at the lower degree. This is a primary degree, and then you're coming down in a wave 2. So this becomes a W, A, B, C correction, X wave. In a rare occasions here, you'll see X wave just go past the wave 1. I don't really like to do that, but this is kind of how this looks better interpreted instead of an A, B, C. So I'm looking at this as an A, up in B, down in C for a W. Then you have, let's say, a wave A in here, a B, and then, a WXY for a wave X, because it looks better as an A, B, C, right, for a wave W. Then you come down in an A, B, C for X, and then another ABC. So let's do that, because that's a combination inside. You can have a combination inside an X wave. So you go here, W, X, Y, like that. So ABC for W down in X, and then 1, 2, 3, 4, 5 for wave A, down in B in here, and then a push higher in the C of Y in this wave X. And then you're selling lower in this A, up in B, and then down in a C wave in here for a wave Y. So that's my best interpretation at the moment. Then you're looking from here 1, 2, 3, 4, 5 for a wave 1, deep wave down in 2. I don't think we have taken these lows. And then you're going 1, 2, 1, 2, and now you're beginning. Hold on a second, because this cannot be a wave 1. So I think what's going on in here, you have actually, let me do this really quickly. I think what's going on, you have a wave 1, A, B, and then down in C, 3, 4, and 5. So this is kind of what I'm looking at next in silver. And this would be a flat in a wave 2. We're going to decompose this in a correction, down in A, so impulse up in B, 3 waves, up into the 90%, sell off in a 1, 2, 3, 4, 5 for C wave. C, it's a little bit smaller, qualifies as a flat, not a problem. And then, I'm sorry, as a zigzag, because this is a 5-wave move. Remember, in flats, you have 3, 3, 5. In zigzag, you have A, B, C, so 5, 3, 5s. And this looks like a 5-wave decline. So I got to go with it as a zigzag. So A, B, and then a truncated C wave in here. And now you're kind of pushing higher. So that's kind of what I'm thinking about right now. And, you know, you might hear some people talking, well, could this Y wave be a triangle where you're actually looking like this? And I'm showing you that. That's a rare one as well, but it can happen. So you have a WXY and this Y wave. It's actually a triangle. So we're going to go ahead and decompose that. And you can also look like that, like a triangle in a Y wave. And you go like this, triangle. So you go wave A, B, C, D, and E. So you can do something like this in a Y wave. And I'm going to show the channel in there. So you go W up in X, and then you have a big correction in a Y wave in a triangle. And then you can push back up higher. Right? You cannot have a triangle in a wave W. You can have it in X or in a wave Y. So it's possible that that's why this kind of looks a little bit funky like that. So either way, this tells you that there could be a much larger move kind of upcoming and moving higher. Now we're threatening to break on top of this channel, right? We're still kind of holding a little bit right there. Maybe we're going to pull back. I'm not sure. But keep an eye on silver, guys, because it's an interesting setup. 28.75 is the next level. Then you're looking to break to new highs in here at about 30.10. So a couple of levels to kind of get through. But if you're not getting rejected from here, and if you're not coming below these levels, which is about $22, right, you can look at long formations out of this move. So that would be something like, let me see if I can get my marker. Right, let's say that that's a wave 1. And then you probably, you know, maybe pull a little bit lower in here, something like that, and start to build a position and then look for the breakout. If you're continuing to drag along and come back like that, then you know this was a failed move, and it's maybe another X wave, or, you know, we can kind of rework this whole count because it just didn't pan out. But listen, nobody can read the future, but the things look fairly interesting in here in terms of silver. So I am excited about this, and I want to see how it's going to pan out. I am positioned for longs, so hopefully this, you know, this moves higher. It's not good in terms of global risk and stuff like that, but with the inflation numbers, with what's going on over in Europe, this could be a pretty good setup for a break to the upside, you know. And this kind of shows you also, guys, you know, how important it is to wait, and you know, because you might have thought that this is a final, you know, this is maybe the beginning of the move, and it was actually just a fake breakout, and you actually corrected lower, which told you that this correction was not enough to correct the entirety of this move, and the market actually had to go lower. So, you know, this is what I mean when I usually say manage your expectations on corrections, and don't necessarily assume that, you know, correction is quickly over after a big strong impulse. You can actually drag it much lower. Anyway, I'll leave it at that because that's beyond the purpose of this video, but this is the count that I have at the moment. Let's see if it's going to pan out and see what happens. All right, guys, talk to you later. Bye-bye.